Hey everyone, welcome back to Corporate Decoder. Today we're diving into Barnwell Industries Incorporated's latest annual report, and let's just say things got really interesting with a proxy fight that's still shaking things up. Alright, buckle up because Barnwell Industries Incorporated, or BarNN as you might see it on the stock market, just dropped their big annual report for the year ending September 2025. This isn't just any report, it is a look under the hood of a company doing its thing in oil and gas in Canada and Texas, and also dabbling in land development in Hawaii. The headline here is a net loss of over $7 million for the year. That sounds like a lot, and it is. But let's see how it compares to last year. In 2024, the loss was around $5.5 million. So yeah, they lost more money this year than last year. This increase in loss is largely due to a big jump in general and administrative expenses, which went up by almost $2 million. The report pins this on new fees and costs related to shareholder contests, legal battles, and get this, a proxy fight, classic corporate drama. On the brighter side, their oil and gas operating expenses actually went down by about 9%. That's good news, but it's also linked to lower production volumes. Production dropped significantly for both natural gas and oil. This is partly due to natural declines in their wells as they age, and also because they sold off some of their US oil and gas assets in August 2025. Speaking of selling assets, they recognized a loss of over $600,000 from selling those US oil and gas properties. This sale means Barnwell no longer owns any oil and gas assets in the US, but they say they will still explore us opportunities. Now, let's shift gears to their Hawaii land business. Their income from these partnerships took a nosedive, going from over $1 million in 2024 to practically nothing in 2025. The main reason, according to the report, is that the last remaining lots in their Increment 1 development were sold in 2024, leaving no lots for sale in 2025. They are still waiting for development to start on Increment 2, but there is no guarantee when or if that will happen, or what kind of money it will bring in. It's a real waiting game with their Hawaii land. Interestingly, their asset for retirement benefits grew significantly from about $4.9 million to almost $6 million. This relates to their pension plan, which is currently overfunded. A large chunk of this asset is actually tied up in the company's own stock. So, if Barnwell's stock price drops, it directly impacts this asset and consequently, their overall financial health. For the numbers crunchers, the auditors Weaver and Tidwell, LLP, billed Barnwell over $340,000 for their audit work in 2025. Interestingly, they didn't bill for any tax services, which is a bit unusual. Looking at their cash situation, it dipped from $4.2 million at the end of 2024 to $2.8 million by the end of 2025. This combined with the operational losses and the shareholder drama had them worried about continuing operations as a going concern for a while. But a private placement offering in November 2025 that brought in over $2.4 million apparently calmed those fears for at least the next year. When it comes to executive compensation, we saw around $300,000 in salary and stock awards for their CEO in 2025. And get this, even though they weren't making much profit, some executives still got stock awards. It's a bit of a mixed bag. The company also has a shareholder rights plan, which effectively makes it harder for any single entity to take over the company without board approval. Now, for the oil and gas side, their proved reserves in Canada are looking okay, but their US reserves have been completely wiped out following the sale of those assets. The value of these reserves, based on what the government considers a standard measure, ended up at about $6.6 million. This is down significantly from over $15 million in 2024. This drop is mainly due to selling those US properties and lower oil and gas prices. And back to the drama, the company's latest report shows that Ned L. Sherwood, a shareholder we've talked about before, is still a major player, owning over 24% of the company's stock, making him the largest shareholder, has been actively involved in pushing for changes, hence those increased legal and proxy expenses. So, what's the story here? Barnwell Industries is in a tough spot. They're facing declining production in their core oil and gas business, significant losses, and the lingering effects of a shareholder battle that's costing them a fortune. The sale of US assets and the land development issues in Hawaii don't paint a picture of robust growth. However, they managed to raise some much needed cash recently, which helps them avoid immediate financial peril. But the real question is, can they find a way to grow their Canadian oil and gas operations or diversify effectively to turn things around? The heavy expenses from the shareholder fight are a clear drain on resources that could have been used for investment. Their future direction depends heavily on commodity prices and their ability to execute a solid strategy without distractions. That's our deep dive into Barnwell Industries Incorporated's latest report. What do you think about their financial performance and the impact of that shareholder dispute? Let us know in the comments below. If you found this breakdown valuable, please give us a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community linked in the description for more real-time discussions. Thanks for watching, and we'll see you in the next one.